Adani Ports Company Analysis. Introduction. It is estimated that approximately 95% of the country's trade by volume and 68% by value is moved through maritime transport. The ports and harbors handling this cargo traffic thus become extremely instrumental resources to India's growth story. Despite a coastline stretching over 7,517 kilometers and about 200 ports, historically our ports were plagued by low productivity and long turnaround times and other malaise. This is slowly changing. It started changing perhaps with the Nhava Sheva port. Multiple private sector port initiatives were started too. While Nhava Sheva is leased to a consortium led by P&O, there were several initiatives to develop private ports in the last 3 decades. While there have been multiple failures, Adani and its Mundra port has been one notable success. Adani Ports and Special Economic Zone Limited has now emerged as one of the most important players. It is currently India's largest integrated ports and logistics company with an objective to merge as India's largest integrated transport utility by 2030. Headquartered in Gujarat, India, it is India's largest private port operator with a network of 12 ports and terminals, including India's first port-based SEZ at Mundra. Before we move on, please consider subscribing to our channel, India Business Insights, for more such videos. History. Founded by Gautam Adani on 26 May 1998, APSEZ, formerly known as Mundra Port and Special Economic Zone Limited, is engaged in the development and maintenance of ports and port-based related infrastructure facilities. Initially promoted by Adani Port Limited and Gujarat Port Infrastructure Development Company Limited, APSEZ, a part of the leading Adani conglomerate, represents a large network of ports in India, including the Mundra Port, the largest private port of India. The right to operate and develop this particular port has been granted to Adani Ports for a period of 30 years. In April 2004, the company entered shareholders agreement with Kutch Railway Company Limited for Gandhinam Dham Palanpur Gauge conversion. In June 2005, Adani Port Limited was amalgamated with the company with effect from April 1, 2003. Further, MSEZ and ACL were merged with us with effect from April 1, 2006. In order to reflect the significance of the SEZ status and the changing nature of our business, their name changed from Gujarat Adani Port Limited to Mundra Port and Special Economic Zone Limited with effect from July 7, 2006. In October 2007, the company came out with the initial public offer IPO in November 2007. Their shares were listed on National Stock Exchange and Bombay Stock Exchange. By 2013 to 2014, it became the largest private sector ports company in India. It has a vision to position itself as the world's largest private port entity. Further, APSEZ expanded its footprint in Maharashtra by acquiring a 100% stake in Dighi Port. The acquisition of the Krishnapatnam Port, AKPL, was also completed in FY 2020-21. The company completed a 41.89% acquisition of Gangavaram Port by Q4 of FY 2021-22 and intends to integrate Gangavaram Port fully into APSEZ's portfolio in terms of operations and financials by FY 2022-23. Industry structure. APSEZ primarily operates in the maritime and logistics sector. We will now look at both these industries in a deeper fashion. Number 1. The maritime industry. The port sector in the country is being driven by high growth in external trade at the moment. Total cargo capacity of all Indian ports increased from 1399.99 MTPA in FY14 to 2562.85 MTPA in FY21. While this sector degrew 3.8% in the first half of 2020 globally, however, by the end of 2020, the situation began to improve. Compounded annual growth in maritime trade over the past 2 decades is about 2.9%, but over the period 2022 to 2026, UNCTAD anticipates that rate to moderate to 2.4%. The medium-term perspective currently continues to be positive, despite the growing risk and uncertainties and the projected lower growth in the global economy, especially in non-major ports. The cargo traffic at India's major and non-major ports grew by 7.2% and 4.1% respectively in FY22. In 2020-21, the non-major ports accounted for 46% of the total cargo at Indian ports, which was due to a significant shift in traffic from major ports to non-major ports. Further, in FY22, all key ports in India handled 650.52 million tons of cargo traffic. Thus, in conclusion, we can say that India's global trade has grown at a healthy pace in the last 5 years. As ports are essential to global trade, their rise directly results in the growth of the maritime sector. The growth thus is expected to stay strong in the coming years. Number 2, the logistics sector. The logistics sector in India was valued at 250 billion US dollars in 2021, contributing around 12 to 13% of the country's GDP. This number is significantly higher than most developed countries, leading to India's poor position 44th in the Logistics Performance Index (LPI) 2018 released by the World Bank. This is primarily attributed to inefficiencies in rail transport, excessive reliance on road transport, and a high level of fragmentation in the industry, with only 10% being in the organized sector. Thus, recently there have been many initiatives such as National Logistics Policy and the PM Gati Shakti program, which are expected to lower the cost of logistics as a percent of GDP to single-digit numbers and make India more competitive in the global domain. It targets to reduce the cost of logistics to the global benchmark by 2030 and break into the top 25 rank in LPI. With these changes, it is estimated that the size of Indian logistics market would grow from $250 billion in 2021 to $380 billion by 2025, at a compound annual growth rate between 10 to 12%. By these estimates, the logistics sector would grow to $3 to $3.5 trillion by 2047. Further, the private participation in the port sector in India has been extremely low. The huge financial cost associated with such undertakings poses an obstruction for private developers who are often working for profits, and this is the major reason for the considerable government presence in the area. Most major ports are overstaffed with unskilled or untrained labor, and the development of such ports may suffer due to frequent labor strikes, inefficiency, and low labor productivity. State agencies often fail to meet expected timelines for the development of access infrastructure, thereby making the developed port virtually unusable. Products, brands, plants, infrastructure. APSEZ Limited defines itself as India's largest private port operator and an end-to-end logistics provider. Their portfolio of ports, infrastructure, and services spans across India. It has a presence on 13 strategically located ports and terminals that represent 24% of the country's port capacity. It has 12 ports with 538 MMT of installed capacity to handle all types of cargo. These include Mundra Port, Gujarat. Located in the Gulf of Kutch, is the first port-based multi-product SEZ. It is a major economic gateway that caters to the northern hinterland of India. It is the world's largest coal import terminal, equipped to handle dry bulk, break bulk, project cargo, liquid, LNG, LPG containers, automobiles, and crude oil. It has an annual capacity to handle 264 MMT cargo. Next is Gangavaram Port. It is located about 5 kilometers south of Visakhapatnam. It is a multi-purpose port with 9 berths with up to 19.5 meter water depth, making it one of the deepest ports in India. It provides efficient cargo handling services for a variety of bulk and break bulk cargo groups including coal, iron ore, fertilizer, limestone, bauxite, raw sugar, project cargo, alumina, steel products, etc. Krishnapatnam Port. It is located on the east coast of India in Nellore district of Andhra Pradesh with a multi-cargo facility with a capacity of 64 mmtpa. It is equipped to handle dry, liquid and container cargo. Tuna Terminal, Gujarat. It is located off Tekra, Kandla Creek, Gujarat with a 14 mmtpa capacity and a draft of 16.2 meters. Equipped to handle all kinds of dry bulk and break bulk cargo, including coal, fertilizers, agri-products, steel, cargo, and minerals, among others, it is well connected to National Highway 8A, a link to the Mumbai-Delhi corridor. Dahej Port, Gujarat. A dry cargo, multi-commodities, port located in Gulf of Khambat, Gujarat, which is located to serve a large hinterland which includes the states of Rajasthan, Maharashtra, Madhya Pradesh and Gujarat, handling capacity of 14 mmtpa to handle all kinds of solid cargo in dry bulk and break bulk cargo, including coal, fertilizers, agri-products, steel cargo and minerals, among other commodities. Next is Hazira Port, Gujarat. It is a deep water port located in the Gulf of Khambat, Gujarat, with an annual capacity to handle 30 mmt cargo. It is an international trade gateway to Europe, Africa, America and the Middle East, equipped to handle dry bulk, break bulk, project cargo, liquid containers and automobiles. Mormugao, Goa. Located on the west coast of India in Goa, it has an annual capacity to handle 5 mmt cargo. Locational advantage in serving the Maharashtra and Karnataka hinterlands. It is permitted to handle coal cargo, adequate infrastructure to handle Panamax and Cape-size vessels. Vizhinjam Port, Kerala. Located in South Kerala, while this port is not yet operational, the Phase 1 capacity of the port is estimated to be at 18 mmtpa with the proposed zero waste to landfill and single-use plastic-free policy. Next is Kattupalli Port, Tamil Nadu. Located on the Coromandel coast, it has an annual capacity to handle 18 mmt of cargo. It is equipped with direct port delivery warehouse within the container yard. The port can handle containers, break bulk, liquid bulk and project cargo. Ennore Terminal, Tamil Nadu. Contemporary terminal located in the northern suburbs of Chennai. It has an annual capacity to handle 12 mmt cargo. Dhamra Port, Odisha. It is a multi-cargo port situated in Odisha, connected by road to NH16 through the state highway. It has a capacity to handle 45 mmt of cargo, equipped to handle dry bulk, break bulk, project cargo. Connectivity to the railway network through non-government railways for 63 kilometers. It has also proximity to the mineral belts of Odisha, Jharkhand, Chhattisgarh and West Bengal, helps service hinterlands. Gateway port for Nepal, Bangladesh and inland waterways connected to industrial and mining belts. Dighi Port. Located in Maharashtra, it is equipped to handle bulk, break bulk and liquid cargo with an annual capacity of 8 mmtpa. Proposed to be a zero waste to landfill port and single-use plastic-free port from the commencement of operations. Across these ports, different services are provided such as bulk and break bulk, bulk cargo, container cargo, crude single point mooring, liquid cargo such as STS, LPG or LNG cargo, etc. Further, APSEZ also owns 6 logistics parks in Haryana, Punjab and Rajasthan. As a part of its logistics business, it offers services such as auto logistics, inland waterways, logistics parks, warehouses, etc. Financials. Over the last 5 years, revenue of APSEZ has grown at a yearly rate of 14.04% versus the industry average of ports being around 13.24%. Its net sales for the recent quarter ending December 2022 was rupees 4,786.17 crores, up 26% year on year. Its yearly sales for FY 2022 were at 15,934 crores Indian rupees in the first 3 quarters of the current year. It is a little over 15,000 crores. Finally, the company has been maintaining an effective average operating margins of 53.26% in the last 5 years and has a comfortable debt servicing capacity. Adani Group has been in the focus and has faced a lot of media scrutiny. Here we will comment mainly on the debt levels of the company. It has an AA plus credit rating from ICRA. Due to aggressive capital expenditure and acquisitions, it has a high level of debt and post acquisition of Gangavaram and Krishnapatnam port. Its net debt, or you can say OPBIDTA, has gone up to 3.4x in FY 2022 from 2.9x in FY last year. It has been continuously improving with higher earnings. It was at 2.8x as of September 2022. Its net debt as of September 2022 was at 36,784 Indian rupees in crores. Adani Ports plans to repay loans totaling rupees 5,000 crores in the next financial year, including bonds. Its debt obligations are extremely low and it has very healthy cash flows from operations. Strategic analysis. APSEZ believes their competitive advantage stems from a multitude of factors such as its adjacent business presence, rich sectoral experience, timely project implementation, ability to commence projects faster than the sectoral curve and at a cost that is lower than the industry average, among others. Further, they also believe to have grown through economic cycles. They also possess a multi-terrain familiarity. And finally, they credit their multi-modal experience and multi-year customer relationships for their success. The company also believes that its ESG commitment has had a part to play. The company remains committed to its ambition of making its ports carbon neutral by 2025 and thereafter progress on the net zero journey. APSEZ also reports its vessels' turnaround and cargo dwelling time as being less than its peers. In FY22, it was reported as being 9:53 minutes or 15.88 hours approximately as compared to the average turnaround time for ships across major ports in India, which stood at around 26.5 days. It has invested significantly in port mechanization and has built other operating efficiencies. Further, its commitment to provide end-to-end logistics also eliminates a lot of unnecessary steps for the companies that get into business with them. Since Adani has acquired many major ports, logistics parks, other port companies, etc., which makes it easier for them to service their clients in a more efficient manner. APSEZ also has strategic partnerships such as BOT agreement with Sri Lanka Port Authority to develop a container terminal in Colombo port. Previously, it also had a concession agreement with the GMB and the Government of Gujarat on February 17, 2001 that enabled it to operate the Mudra port. It has also signed a port services agreement with Tata Power for handling imported coal cargo in April 2007 and a port services agreement with Maruti Suzuki India Limited for handling car exports in February 2008. Some of its key acquisitions include the recently acquired Haifa port, acquired for $1.20 billion in July 2022, Gangavaram, acquired for $496 million in March 2021, and the Ocean Company Services Limited, acquired for $223 million in April 2022. The culmination of all these factors together make APZ a domestic leader with 95% market share of the total private port market. It aims to transform itself from just a port service provider to a complete logistical provider. What this could mean is that companies would now be more likely to engage with APZ to move products from India due to its more time and cost efficient solutions. Future plans. APSEZ now aims to grow their business even faster than before. In the space of merely 3 years, APSEZ aims to double its EBITDA earnings and yearly cargo. Currently, it is also looking for investment opportunities in Asian countries and enhancing its logistics business. By 2025, the Adani Group also expects to increase cargo volumes 60% to 500 million metric tons, grow their rakes count from 75 to 200 and emerge as the world's largest private ports company and the country's largest transport utility by 2030. While it is safe to call APSEZ an industry leader and currently the industries it operates in do seem to be presenting newer opportunities. Only time will tell if APSEZ can continue to reach its ambitious goals. Please like, share, and subscribe to our channel for more such content. Also, thank you so much for watching.